Good morning. You are watching Bloomberg Daybreak Europe. I'm Tom McKenzie in London. Happy Wednesday. These are the stories that set your agenda. Stocks gain across Asia, much of Asia at least, as President Trump unveils a $100 billion AI investment push. Could get to $500 billion. Softbank, OpenAI and Oracle tapped in a joint venture to build data centers and AI infrastructure. Still on the table, Donald Trump says his threat to hit China with 10% tariffs could come as soon as next month. Shares trade lower in Beijing. Plus, the global trade conversation continues at the World Economic Forum in Davos. We're going to hear from the German finance minister and the CEOs of Barclays and the Hong Kong Stock Exchange later this hour. Let's check in on the markets. So the latest message from President Trump, not so fast, China. 10% tariffs could be in the offing as soon as February the 1st. You're seeing the downside pressure on mainland shares today. But the impetus more broadly for these markets then is the AI push, and you're seeing that reflected in the surge in the stock price for Softbank. We'll break that story down for you in more details. European stocks looking set for a sixth straight day of gains, potentially. You've notched 5 straight days of gains across European stocks. You're looking to add on that today, up 0.2%, according to the European futures. FTSE 100 futures, meanwhile, pointed to gains of about 0.1%. S&P futures stateside looking to add 0.3%, and the Nasdaq again could get that lift from the AI infrastructure spend plans coming through from this Trump administration, currently looking to add 150 points. Let's flip the board and look cross-asset. Treasuries relatively stable, the 10-year still above that 450 level, currently at 458. The Japanese yen at 155. We look ahead to the BOJ meeting, of course, and decision on Friday. Economists increasingly expecting that they will hike again. Ueda, the third hike for him, and you could see by the end of play Friday the highest interest rates in Japan since 2008 at just 0.5%. Brent, $79 a barrel as things stand. A little bit of pressure on oil, down 0.1%, weighing up, of course, the tariff threat on China. And gold continues to grind higher, currently up 0.4% in the session today after rallying 1.4% for the yellow metal yesterday, currently at 2,756 per troy ounce. Let's cross over right now to Singapore. Avril Hong has her finger, of course, firmly on the pulse of the Asian markets. Avril.
Yeah, Asia stock gauge running higher today. It's really riding an AI wave, helping to offset China tariff concerns following Trump's reiteration. 10% China tariffs on all China imports, to be exact, still on the table. Chinese stocks underperforming, though I would just note that this is following on from a couple of sessions of gain, so something that a breather was due. Note as well that 10% is not quite as bad as the 60% that was floated previously. Still, these declines in Chinese stocks do reflect how fragile sentiment is on the mainland and in Hong Kong. Flip the board, as I say, it's really an AI play thanks to Trump. So we're seeing the likes of Softbank, double-digit surge to the highest level since July, and some analysts have already put it as a green light from Trump on all things AI, so boosting not just some of these chip makers, but also data centers, cable makers, Furukawa among them in Japan, also double-digit climbs. Flip the board again. You touched on this earlier. What we're expecting from the BOJ on Friday. I would just say that when it comes to these tariff threats, it's really showing up in the pressure we're seeing on the renminbi as well as on the yen. And this is, of course, coming despite the expectations that the BOJ is good to go on Friday. If you recall, when Ueda gave his dovish presser in December, the thing that stood out was the uncertainty surrounding the Trump administration's policies. We've kind of gotten through a lot of it without major negative surprises for the Japanese economy. So this idea that we're good to go for Friday, despite this, the yen weakness, I think just a reflection with every tariff threat, a vindication for the yen bears, Tom.
Yeah, we've had Canada, Mexico, China, the European Union. Is Japan also on the naughty step for Donald Trump as we lead up to that decision for the BOJ? Avril Hong checking in on the markets in Singapore. Avril, thank you. So President Trump saying his threat to hit China with 10% tariffs on all imports is still on the table and could come as soon as next month.
about a tariff of 10% on China based on the fact that they're sending fentanyl to Mexico and Canada.
For more, let's bring in opening trade anchor Kriti Gupta. So, Kriti, the reprieve for China, it was short-lived.
It really was a complete 180 in the last 48 hours from Donald Trump. Because remember, ahead of his inauguration, there were reports suggesting that it would be Mexico and Canada first, and then maybe China considered next month, after giving some time for his agencies to really do some of their background work, conduct some studies to talk about the actual kind of compliance that China has done in terms of previous deals. It feels like that has all been thrown out the window, although there are still studies being done on that compliance story. He's really hooking these comments, this potential 10% tariff on China, connecting it to the fentanyl story. Remember, immigration is the very first thing he mentioned in his immigration speech, in his inauguration speech. I mean, it's also crucial to mention that during his first administration, he did negotiate a farm deal with China, one that hadn't really been complied with in terms of buying things like soy, corn, etc. Remember, agricultural products are ultimately the #1 export from the United States to the rest of the world, the second being Boeing airplanes. So that's really the kind of buying that China needed, that kind of to get on Donald Trump's good side. But it's not just China. He's got his eyes set on right here in Europe as well. Take a listen to what he had to say on the EU.
Other countries are big abusers also. You know, it's not just China. China's an abuser, but the European Union is very, very bad to us. They treat us very, very badly. They don't take our cars. They don't take our cars at all. They don't take our farm products, essentially. They don't take very much. We have a $350 billion deficit with the European Union. They treat us very, very badly. So they're going to be in for terror.
47th President of the United States, they're talking about Europe just not buying, again, cars and farm goods, again, being the really key piece. What he didn't mention there is steel tariffs, which are the kind of overhang of the European Union. Under the Biden administration, they've talked about changing that to quotas and not just tariffs as well. So that's going to be crucial in terms of whether they are able to navigate that, have more tariffs, or take them off the table.
Arguably, the focus on AI is also a part of the focus on China. It's the other piece of this puzzle. And we have the details now around this massive infrastructure spend. Question marks about where that money comes from and the exact quantity, but this seems to be significant as well.
This is massive. I mean, look, Donald Trump has talked about being a deal maker when it comes to things like the TikTok ban, now really arranging things like the Oracle, Softbank, and $500 billion worth of investment into the United States. This is really concentrated in data centers, and I think it's fascinating because it comes in 48 hours basically after you had his inauguration, where tech CEOs were stood in front of some of the congressional and cabinet picks as well, which really speaks to where a lot of that investment is going, and almost heralding some of that investment to infrastructure, to AI infrastructure. And that's really important as well when it comes to just moving all of this along and really not only courting the likes of Softbank and Oracle as well, but courting some of the other biggest investors around the world.
The final piece as well, and again, it all links back to China, is TikTok. And he seems to be pretty convinced, the president, that he can get this deal done. And this time he's looking at Oracle, but also potentially Musk as well.
Yeah, it's fascinating because, remember, Oracle hosts the cloud server that TikTok is on. TikTok is a major Oracle customer as well. So this kind of makes sense in terms of vertical integration from the likes of Oracle and TikTok. Elon Musk is a competitor of TikTok, so that one's kind of interesting. When he's also talking about a government stake potentially in TikTok. This has never happened. The U.S. does not have stakes the way that, say, Germany has a stake in Commerzbank or France has stakes in infrastructure. That doesn't really happen in the United States, even when it comes to things like infrastructure companies, let alone social media companies that have been owned by foreign entities. So he's really creating a new precedent here. But remember, there are other potential names in the race, not officially, but there's been analysis that a TikTok acquisition might be helpful for the likes of Amazon, Walmart, among others.
Kriti Gupta, thank you very much indeed. Anchor of the opening trade on the major lines that crossed in the last 24 hours from Trump, with, of course, China central to that. Actions around AI, TikTok, and, of course, that threat of 10% tariffs. Kriti, thank you. Let's dive deeper into the market reaction then from the comments from US President Donald Trump on tariffs. Let's bring in Bloomberg's Valerie Teitel for the market view. What is the latest in terms of how the markets are reacting to this threat, Val?
Honestly, Tom, I had to squint to see any reaction to the dollar on those latest tariff threats when it comes to China. Maybe perhaps showing us that that 10% tariff on China is already in the price. We are seeing the Bloomberg Dollar Index trading flat on this session. And all those announcements we heard from Trump late last night are doing very little to dent risk appetite after the S&P closed up nearly 1% yesterday. We're still on a firm footing when it comes to risk. S&P futures up 0.3%. One thing I did find interesting, Tom, is the announcement from the SEC yesterday when it comes to the cryptocurrency industry. The SEC was looking to launch a cryptocurrency task force to perhaps create a clear regulatory environment when it comes to the cryptocurrency industry. It's also interesting to note, Tom, that since Gary Gensler has stepped down, there has been a huge waft of filings for crypto-linked ETFs. So a lot of interesting things happening in the crypto market. I guess getting excited for a looser regulatory environment under the SEC under Donald Trump.
Yeah, just shy of 106 right now on Bitcoin. Not back to those 108 levels, but still gaining from the picture yesterday, even as it's off a little today in the session, down 0.8%. Switching to Europe then, Val, and the ECB's Jörg Kukies speaking to Bloomberg on the sidelines of the World Economic Forum about his inflation expectations. Let's take a listen.
All the data that I read over the last couple of weeks, I think were not a surprise to me. So it gave me the indication and also the certainty that we can achieve our target back to price stability. And we shouldn't forget where we came from. We came from more than 10% inflation rates for the Eurozone. And now we are close to our target.
Val, Nagel obviously on the hawkish end of the spectrum when it comes to the ECB, given his role at the Bundesbank. Where do things stand in terms of traders' markets' expectations for ECB rate cuts through this year?
Well, it looks like a cut next week is almost certain based on the ECB chat we had yesterday on the sidelines of Davos. The market is pricing in around 4 back-to-back cuts to reach neutral, which is around 2%, so the market thinks, by halfway next year. Now, it's interesting, Tom, that none of the ECB members at Davos yesterday wanted to talk about entering into expansionary territory. The possibility about going below neutral is still something they don't want to discuss. But another topic that was discussed was the fact that Trump is only highlighting the European competitiveness issues. We had comments from both Villeroy and Casimir highlighting the fact that what's going on in the U.S., the different regulatory environment under the U.S. is only maybe pushing the urgency for the U.S., for Europe to push through structural reforms in order to make a more competitive landscape here in Europe.
Yeah, and to your point, a reminder of that overnight with the ripping up of those AI regulations, or at least guidelines in the US by President Trump. To your point on competitiveness, Bloomberg's Valerie Teitel, thank you very much indeed. What we've been hearing from those ECB voices in terms of how we think about next steps for that central bank. We're going to have a great lineup of additional guests, of course, from the World Economic Forum in Davos this hour. Bonnie Chan, CEO of HK Exchange, is coming up. Jörg Kukies, Germany's finance minister. Really interesting as we build up to that election, of course, in Germany. And CS Venkat, CEO of Barclays, of course. So that conversation coming up later this hour as well. Stay tuned for all of those interviews from the World Economic Forum. This is Bloomberg. Welcome back. Chinese Vice Premier Ding Xuexiang has told the World Economic Forum that China does not seek a trade surplus. Well, it certainly has one. This, as President Trump says, his threat to hit Beijing with 10% tariffs on all imports is still on the table. Let's get more with Bloomberg's Haslinda Armin, who joins us from Davos with a guest who straddles the divide. Arguably, that divide has closed in terms of Hong Kong, China, of course, and the relationship with the US. Many just saying Hong Kong's just another Chinese city. Has.
Well, not really. You know that. And also, Tom, that 10% Miling of 10% tariffs, of course, front and center. We've seen the impact on markets already. Well, let's get perspective. Bonnie Chan, CEO of Hong Kong Exchange, is here with me. Bonnie, good to have you with us.
Yeah, good morning.
Now, U.S., it seems, is miling at 10% tariffs,
right.
Way smaller than 60% initially, but markets still not liking it. We're seeing, markets getting sold off in China and Hong Kong. How are you assessing sentiment right now?
Well, okay, so let's think about the last few trading sessions, maybe. We actually had a good run. I think, what we saw in the Hong Kong market today, it's a small reaction to the news, but you have to remember we had 6 consecutive days of gains, so I think it's just a small correction. And in any event, I think the market it's getting used to sort of having surprises sprang on it. So I don't worry, really. The momentum overall is quite good. And we're at Davos. I've been speaking to a lot of people. Obviously, the topic of U.S.-China relations come up in lots of conversation. I would say that generally there is quite a bit of optimism expressed. So still early days. We're in the 3rd week of the new year. But so far, the Hong Kong market has shown great momentum in terms of volume. Last year, we closed the year with ADT of about 132 billion. Year to date, we are already up at 150. So, yeah.
The optimism is driven by prospects of stimulus from China.
Yes.
But with drip kind of tariffs, some say that, the massive stimulus that we're expecting from China may not happen. I mean, how are you assessing prospects of stimulus and how that might play out into the markets?
Okay, I think the spectacular moment, shall we say, obviously came after the September 24th announcement of the stimulus package. And we saw the market reacting in quite a strong manner. In fact, in Hong Kong, in the course of 2 weeks, we broke our ADT record 3 times. And the current record is 620 billion. And that's about 6 times what we did in the first 6 months of 2024. I remember, when we were seeing that play out, a lot of people were asking, okay, so when is China going to bring out the bazooka? Remember the bazooka? My personal reaction to that is I don't think, the Chinese leaders are going to just sort of, bring out one set of stimulus and say, that's it, we've cured all problems and that's the silver bullet. I do think that they're very thoughtful about the issues that have to be addressed. And as a result, and especially given how dynamic the market conditions and the macroeconomic conditions are, I do think that we should expect to see more thoughtful rolling out of different policies, which will be targeting the questions at hand.
And Bonnie, what's the outlook for the IPO market? Quite a turnaround in 2024. I mean, Hong Kong was top 4 in terms of IPO market.
Yeah, thank you for asking that question. So the IPO market, we saw a very good comeback in 2024. So in terms of number of IPOs, we completed 71, which is by and large, the same level or the same number in 2023. However, the amount of fundraised was 90% more compared to the year before. Also, we are seeing very big deals getting done. So
more big deals expected in 2025?
I think so.
CATL, for instance?
Well, they have already announced their plans. But remember, I think the market sort of reopened with the Medea. $4.6 billion IPO, which was the 2nd largest in the world in 2024 and the largest in Hong Kong since 2021. Shortly following that, we saw Shenfeng, SF Express, also Horizon Robotics. And the participation by US and European investors in those deals are very, very good. And after that, I think this is actually a response to the CSRC policy, which was announced back in April when they issued the 5 measures in support of the Hong Kong market. And they said they're going to encourage more leading companies in China to come to mainland China, to come to Hong Kong to get listed. That momentum will continue. In fact, we have completed 10 IPOs in December, another 8 in January. It's only the 3rd week of January. So I think there's a lot to look forward to. In the pipeline, we have about 100 deals waiting to get done with exciting names like Cattle, and I'm sure there will be more to come.
Bonnie, we have just under 60 seconds. We know that Hong Kong wants to be an international gold center. What are your targets for this year, and where do you go from here?
Now, obviously, we are in the commodity space. We have LME, which is our wholly owned subsidiary. And we just announced, actually, yesterday that LME has accepted Hong Kong as a warehouse location in the LME network. And that's very, very important, considering that China is a big producer of metals as well as a big consumer of metals. LME's, if you look at LME's client, there is a very big proportion which are mainland China based. And therefore, I think this first move, to include Hong Kong as a location is probably a step that we take in furtherance of our China commodity strategy. And in due course, I can share more with you.
Bonnie, thank you so much for that. Bonnie Chan, Hong Kong Exchange CEO. There you have it, Tom. Bonnie Chan, pretty upbeat on the prospects for IPO in Hong Kong. And of course, she says perhaps the drop that we see in the markets right now in terms of Hong Kong as well as China, it could be just a knee-jerk reaction to that 10% tariffs.
Yeah, 100 deals in the pipeline, potentially, in terms of IPOs. Great conversation. Has Linda Arment on the ground for us at the World Economic Forum. Thank you, Has. Now, our Davos conversations continue this hour. Jörg Kukies, Germany's finance minister, speaks to us at 6:30 a.m. UK time to discuss the state of Europe's largest economy. A crucial conversation as we build up to the elections, of course, in Germany that could have consequences well beyond the borders of that country, of course. And at 6:40, we're going to speak with C.S. Venkat, CEO of Barclays, about the bank's turnaround plans. Do not miss those conversations. Coming up, ECB Governing Council member Joachim Nagel says there is a, quote, certain probability of a rate cut next week. We bring you more from our interview with the Bundesbank head. That's coming up. This is Bloomberg.
Yes, there are concerns. This is for sure. We have to do our homework. We have some structural issues. Our election is coming in 4.5 weeks. This is a very important election. So I guess the new government, I think they have to overcome the structural issues. But I said it many, many times, I don't think that Germany is the sick man of Europe. We have still very good potential, a good structure of our economy. We have strong SMEs. So I'm positive, but we have to do our homework.
But what does Germany need right now? More investment from the outside?
I think we need more investment. We need a capital market union for the European Union. I think capital market union is very important to crowd in private capital for the investment, to change the economy, to finance the transformation process. This is key.
President, if we have a trade war between the US and China, frankly, it's unclear to a lot of economists if that means deflation coming from China or if it's inflationary.
I think there's an ongoing discussion about that. I have to admit that I do not have a clear view about that because it's also a very complex setup. What does that mean in terms of spillovers to the European Union? It looks like that if you are in a kind of a trade war situation, the only thing I can say, there are losers on both sides.
And where does Europe sit in the middle?
Well, when you're sitting in the middle, then you are in a kind of a squeezed role. It's also not very easy. So China is also very important for the European Union. But as I said, it is too early to give really a clear indication what is the way forward here.
That was the Bundesbank president and ECB Governing Council member Joachim Nagel speaking to Bloomberg's Francine Lacroix at the sidelines, of course, of the World Economic Forum that continues in Davos. Now, some other stories making the news this Wednesday. The US president says he is likely to impose sanctions on Russia if Vladimir Putin does not come to the table to negotiate on Ukraine. Donald Trump said during his election campaign that he could end the conflict in one day once back in office. On Monday, Putin said Russia was ready for talks with the US, emphasizing the need for a long-term peace based on respect for all nations' interests. And at 3:15 p.m. UK time, we will hear from Ukrainian President Volodymyr Zelensky after he spoke with Bloomberg's editor-in-chief, John Micklethwaite. Listen in to that interview later today. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. Happy Wednesday. These are the stories that set your agenda. Stocks gaining across much of Asia, if you strip out China, as President Trump unveils a $100 billion AI investment push. Softbank, OpenAI and Oracle all tapped in a joint venture to build data centers and AI infrastructure. Still on the table, Donald Trump says his threat to hit China with 10% tariffs could come as soon as next month. Shares trading lower in Beijing. Plus, the global trade conversation continues at the World Economic Forum in Davos. We're going to hear from the German finance minister and the CEO of Barclays. Let's check in on European futures then. After 5 straight days of gains, you are set for a 6th straight day if this story holds. Currently pointing higher by 0.2%, brushing off so far European futures the threat of tariffs on China. It's the focus on tech, it's the focus on AI, with Softbank and Asian stocks powered higher by that infrastructure AI spend. The downside, though, coming through from mainland China and Hong Kong stocks on the tariff threat. FTSE 100 futures pointing to gains of 0.1%. S&P futures stateside looking to add 0.3 after a decent day yesterday. Nasdaq 100 futures looking to add 142 points. Tech, again, stateside to get a lift, up 0.7%. Let's flip the board and look cross-asset. The Treasury markets are relatively stable in the session today. 457 right now on the benchmark 10-year. 155, a little bit of softness coming through, down 0.2%, the Japanese yen versus the US dollar. The BOJ is expected now to hike on Friday. Brent at $79 a barrel, down 0.3%, and gold close to levels we haven't seen since November after a rally of 1.4% yesterday, looking to add 0.1%, adding 0.1% so far in the session. The yellow metal at 2,748 right now. Let's get to German politics. The German Chancellor says the EU is working on a proposal for block-wide purchase incentives for electric vehicles to support the union's struggling automakers. Speaking at the World Economic Forum, Olaf Scholz said Europe's economy must have more competitive industry and less bureaucracy. For more, let's head over to Bloomberg's Francine Lacroix, who is on the ground for us, of course, in Davos with another important German voice for us. Fran.
Good morning, Tom, and indeed, happy Wednesday. Joining us now is Germany's finance minister, Jörg Kukies. Mr. Kukies, thank you so much for joining us. So, look, there's a lot of talk in Davos about Trump 2.0, what it means for Europe. Is Europe ready? Is Germany ready?
Well, I think we are still learning about exactly what the policy will be. No matter how the policy is formed, it's always in our interest to be close to our biggest ally and to strengthen the transatlantic relationship. So the dialogue with the new administration will be sought, and just like in the last Trump administration, we will look for very close contact and interaction.
Germany was really in the eye of the storm the first time around that Donald Trump was president. Do you worry that actually it's the same this time around and that retaliation could be limited from Europe?
Well, when I talked to my colleagues from the other finance ministers yesterday in Brussels, of course, those who have strong trade ties with the world and who are export-oriented have the most at stake when it comes to potential disruptions of trade. But that's something that that's normal for us and is to be anticipated because Germany is just so very export and import oriented. So, of course, international global trade is very important for us.
What does retaliation from Europe look like?
Well, I wouldn't want to talk about retaliation if there's nothing yet to retaliate to. And who knows, maybe the way I understood the president's statements yesterday, there's also scope for discussions. Germany is already importing very, very substantial amounts of oil and gas from the United States. And for us, the security of supply of the transition energy is extremely important. So in that sense, I would say, let's talk before we think about retaliation.
But is there a sense or actually an agreement, a mutual agreement that there could be a joint response from Europe if things were to go sour?
Well, trade policy is organized at the European level. The European Union just signed a very promising trade deal with the Latin American Mercosur countries, and we have given the authority to conclude trade agreements and respond and interact with the world to the European Union because we said we want to be one big bloc, and that's why trade will be negotiated at the European level.
Minister, it looks like, and again, we have everything to look at, but it looks like some of the policies that Donald Trump will put in place will be dollar positive. Does a strong dollar help with European exports?
Well, markets are already pricing that in, right? We've seen this this movement. So there's always offsetting factors, and that I think is something that when I talk to the CEOs here, of course, also comes up in their minds that from the global sourcing and FX adjustments, there's a lot of factors that go in, so it's never a unilateral effect that takes place.
Minister, I mean, one of the big advantages that the U.S. has, of course, these deep capital markets, which means that they can attract investment, that investment flows. You've spoken in the need of Europe to have this. So why is there such pushback in Germany from Unicredit trying to buy Commerzbank?
Well, there's a huge amount of support for the capital markets union in Germany. In fact, since last year, Germany and France from the Joint Ministerial Council have pushed for stronger integration of European capital markets and banking markets. We've seen many transactions of European, of American, of global financial players in the German market. Just recently, a Dutch bank bought one of Germany's largest private banks. A French bank bought one of Germany's largest private banks, which was previously owned by a British bank. An American private equity company bought one of Germany's largest banks. So there's
a problem
broad
with Unicredit?
opportunity. As we've said many times, it's idiosyncratic. It's the behavior in this specific case, which was intransparent, which was opaque. Hostile takeovers are not a recipe for success for systemic banks. So the discussions we're having are very specific to this one case.
And Jörg really pushed back against the fact that he has been called not transparent. Will you meet with him in Davos? You're both here.
It's not planned.
Okay, talk to me a little bit about...
Given the many multi-participant fora, we may be in the same forum once or twice. Who knows?
Okay, but there's nothing on the table to try and iron this out
no
or to understand both sides.
Planned for Davos.
Minister, talk to me a little bit about what else is needed for Europe. And actually, there's a lot of defense spending that also needs to go to Ukraine. But maybe you want to use that money elsewhere to make sure that your voters vote for you come February 23rd.
The support for Ukraine is absolutely high priority for as long as it takes. As we said at the G7, we've held our promise with a 50 billion package to Ukraine, which was deemed near impossible several months ago. It was concluded, it was done, the money is flowing now. So support for Ukraine is absolutely essential. And if I see the brutality of Russia's attack, I spoke with the Ukrainian finance minister yesterday morning, and the attacks on the civilian infrastructure, on train stations again. Everything he told me it just reinforces my conviction that we absolutely urgently have to support Ukraine. So that definitely is top of mind. On competitiveness, Europe has to finally make decisions. Cutting red tape, cutting bureaucracy, accelerating planning, permissioning, getting the capital markets union done, fixing our gap in securitization, in equity finance, in pensions incentives. All of those topics are front of mind. And I'm hearing a massively increased urgency from colleagues from the European Commission. I think everyone has understood that we have to get serious about these things.
But Minister, for Ukraine, is 3 billion the right number? Again, there's been a little bit of pushback.
Germany is Ukraine's largest supporter in Europe and will continue to be so. The Chancellor has made a proposal how we can add another 3 billion to the already existing large amount that we're supporting Ukraine with, and the rest is up to the debate in Germany on how exactly to do things.
But the Chancellor, is my understanding that he pushed back against the 3 billion a little bit because he's worried about cuts in welfare and pensions.
As I said in an interview yesterday, he's made a proposal on how we can get it to work, and at the same time not increase the gap in our budget of around 16 billion that we already have, and that we will have to in the course of 2025, make a decision on how to bridge that gap.
Minister, what levers does your party have to try and get voters more on board for that election, February 23rd?
Well, there's still a lot of undecided voters, so I think that's very important. The campaign has, in earnest, started at the beginning of January, so all of the discussions, the TV duels and everything is just starting, so it'll be a short and, for our standards, very short, but as usual, intense campaign.
But there can't be promises on pensions or anything like that that would try and get voters to listen a little bit more to what you have to say?
No, I mean, the question of lack of economic growth, the question that we are structurally in such a weak position that our growth potential has shrunk from 1.5% at the beginning of the century to 0.5%, that is one of the core topics. And my party has made very specific proposals on how we can make investment grants, investment support for production in Germany. So in that sense, this question of how to attract private investment, how to fix our public spending deficit on infrastructure, on education, on the rail system, on bridges, on roads, on 5G, on all of these things is going to be a very contested and interesting topic.
Yeah, the economy is always number one, top of mind of all voters. Thank you so much, Minister. Jörg Kukies there, Germany's finance minister. With that, Tom, I'm going to send it back to you in London. We'll have plenty more throughout the day here in Davos.
Thank you.
Francine Lacroix, fantastic in Davos. Some great lines to unpack there from that interview on everything from the opaque nature, I'm quoting, of course, from the finance minister around Unicredit's takeover attempt, or at least building up that stake in Commerzbank, to EU competitiveness, support for Ukraine, and, of course, the elections and the politics domestically of Germany as well. Now, plenty of top interviews still to come from Davos today, including with Barclays CEO CS Venkat. That's coming up. UK Chancellor Rachel Reeves as well. Ukrainian President Volodymyr Zelensky will be talking to us. Daniel Pinto, the president of JP Morgan Chase, in conversation with Bloomberg. And Nasdaq CEO Adina Friedman, as well as former US Secretary of State John Kerry. You wouldn't want to miss any of those interviews. Coming up, Commerzbank's CEO says the German lender has eyes on various potential smaller deals to create value for shareholders. But speaking to us at the World Economic Forum in Davos, Bettina Orlopp said the bank won't do anything, quote, stupid to fend off that potential takeover by Unicredit.
I mean, what do? We really focus on our own strategy, on the implementation. We deliver the results. We are now heading our Capital Markets Day mid-February, where we will present an upgraded strategy. We will present our 2024 results, which will serve as an excellent basis for 2025. And we always said that if Unicredit wants to put a proposal on our table, we will evaluate, but nothing is on the table, so we focus on our own strategy.
Yeah, what are the types of concessions that you're looking for from Unicredit then that would convince you?
Well, I think, first of all, there must be a draft proposal which we could discuss, and then we could compare notes, and we could move further. I think that is a prerequisite we're looking for. And until then, it's very much we stand alone.
Any specific share price you have in mind that you want to reveal to Bloomberg Television?
No, I mean, we are constantly working on improving our share price. We just completed our share buyback program today, the first tranche. We have applied for the second one. We expect approval in the next weeks, and then we will continue with that. So we will have a very attractive capital return for 2024. And then we will hopefully have some promising plans for everybody presented during Capital Markets Day. And I mean, our intention is to bring the share price up, to deliver sufficient capital return, and then automatically target prices, and also share price will follow.
It does seem to me that you're open to the idea if a proper offer is given to you, as you just said, as you indicated. What about other M&A to fend off the approach? Would you consider a white knight?
Well, we always said that we would not do stupid things, and that we would really concentrate on value creation, and therefore we evaluate certain M&A options for ourselves, but that are really bolt-on acquisitions, smaller ones, to make our value proposition better. Besides that, we always said that we would act in the interest of our stakeholders, and that's what we do.
Commerzbank CEO Bettina Orlopp speaking to us in Davos. Coming up, we go back to the slopes for a conversation with the Dutch Central Bank Governor Klaas Knot. Stay with us. This is Bloomberg. Welcome back. President Donald Trump has singled out the EU as being, quote, very, very bad to the US. Let's get some more reaction then from the World Economic Forum in Davos, where Francine Lacqua is standing by for us. Fran.
Yeah, thank you so much. We need to talk monetary policy. We don't usually do that before 10 a.m., but we're making an exception because we have an exclusive conversation with Klaas Knot, the Dutch Central Bank Governor and Chair of the Financial Stability Board. Governor, thank you so much for joining us. Look, I mean, next week, there's, of course, the ECB meeting. The markets think it's a done deal. What would it need to happen for you to change your mind and stay on hold?
Well, it's never a done deal until we've arrived in Frankfurt and listened to our staff, giving us the outlook, etc. But I must say, as long as sort of the incoming data is in line with our projected return of inflation to target later this year, then I think there is little obstacle to making another rate cut. To change my mind for next week, I mean, rather unlikely. But of course, there are some risks that will play out in the more medium to long term that we have to be wary of.
But Governor, you know, given everything that's coming, which is possible Trump policies, you know, possible trade wars and tariffs, this seems very unlikely, right? Are we 95% there on next week?
Yeah, it's difficult to give a percentage, and yet again, I mean, staff needs to confirm sort of my perception of the incoming data. Meeting by meeting has served us pretty well in a world which was already plagued with quite a bit of uncertainty. So let's stick to that rhythm, and we'll let you know next week.
Okay, so and we'll be watching very closely. When you look at the data that we had so far, what does your outlook actually for cuts look like this year?
Well, that's hard to say. I mean, I think the data is encouraging. So it confirms the broad picture of that we will return to target in the remainder of the year. And hopefully, the economy will also finally recover a bit. Because there is actually not so much rational reason for consumers to be so reluctant to spend in the euro area. Real incomes have been rising already for a long time. The consumer is sitting on a pile of savings. The labor market is still producing full employment. So what we're hoping to see is also a little bit of recovery in the economy. And then we'll have to take it from there. That's what meeting by meeting means.
But the world looks like it's going to be more uncertain rather than more certain. So that will presumably actually impact consumer spending.
I would say if you look at the balance of risk, what we always do, there is clearly a new downside risk on the horizon, and that might be the impact of trade policy, trade restrictive policies. Then again, we have to watch the space and see what the impact on inflation will be. On growth, it's pretty clear that the impact will be negative. But on inflation, it's not so clear. You also have to take into account possible trade substitution effects from other parts of the world and what have you. And it's not even so clear whether this will have a meaningful impact on US inflation as well. The US consumer is pretty wealthy at this moment, so it may well be that the US consumer is simply able to pay for these tariffs without much ripple-on effect elsewhere in the economy.
Where do you see interest rates in Europe in June?
That's difficult. I mean, we are on a trajectory toward neutral, and then the question, of course, is where is neutral? Well, we can only say with a certain range. But let me say that I'm pretty comfortable with the market expectations for the upcoming two meetings. And farther than that, I find it too early to comment.
Because of Trump policies or because of what the Fed does?
Yeah, and also because with each rate cut, we are, of course, getting closer and closer to neutral. And conceptually, there is some difference between removing restriction, which is what we're currently doing, and, if necessary, going to more stimulative posture.
And so, again, on balance, what's your gut feeling?
Well, at this moment, if the recovery proceeds, if we approach target by, let's say, the middle of the year, then I'm not convinced yet that we need to go into stimulative modus as well. Then again, there is a range for neutral, where in the range that gives us some leeway. Okay. Again, let's not sort of be head over heels here. The data will tell us where to go.
But do you feel like the ECB policy is much more tied to what the Fed does because of market dynamics?
Monetary policy always takes place in an international context. Yet, there are always opposing impacts on monetary policy, say, in the United States. Suppose the Fed runs a bit tighter ship because of internal US policies. that has two opposing effects on us. Some of these tighter financing conditions will spill over through global bond markets. But at the same time, if it also leads to a stronger dollar, a weaker euro, we'll import a little bit of inflation through that channel. So which of the two effects dominate, that's always a big question mark.
Governor, I know this is a difficult question because it's only been 3 days that Donald Trump has been president because of the inauguration. But actually, given what we know so far, so 3 days in, is it more likely that you cut more than expected or less than expected? Because there are various factors because of deflation in China. We're not sure what happens to trade, but what's your gut feeling?
It's too early to tell. 3 days in, you rightly point out, you also already illustrate the great many channels through which his policies might affect the global economy, the global inflation outlook. We will each 6 weeks, when we come to Frankfurt, make sure that we do the best we can in calculating what this means for the inflation outlook for the euro area, and that is our single compass.
Okay, Klaas Knot, thank you so much. That was, of course, the Dutch Central Bank Governor and Chair of the Financial Stability Board. We're also doing a panel together on financial stability, so stay tuned for that a little bit later on, so that you see also maybe some of the concerns over shadow banking. Tom, I'm going to send it back to you in London.
OK, another valuable conversation. Bloomberg's Francine Lacroix on the ground for us at the World Economic Forum in Davos, of course. There's a lot more still coming up. Stay with us. This is Bloomberg. Welcome back. Let's take our viewers inside Bloomberg House at Davos right now for a conversation between the CEO of Norway's Sovereign Wealth Fund, Nicolai Tangen, of course, and Bloomberg host and Carlyle co-founder David Rubenstein. Take a listen.
In less favor than they were maybe 2 or 3 years ago. Is that the case in Norway?
No.
Oh, so you don't really care what the U.S. is doing in this regard?
Well, there is clearly a backlash against ESG, right? But the policies we have, they are anchored in the Parliament, and so we are not changing our mind. We think it's important with client reporting. We think diversity is good, and so on.
So, in most Scandinavian countries, I think certainly in Norway, there's concern about climate change, and there's a lot of interest in renewable energy. But you make your money from non-renewable energy. So, is there an incongruity when you're making all this money from carbonized kind of chemicals and fuels, but you really don't believe in that to some extent? How do you square that?
Well, we believe in it, and we do think that, in particular, the gas that Norway produces, which is a very high proportion of the gas supply in Europe, is very, very important, and it continues to be a big part of the energy supply.
OK, David Rubenstein with the CEO of Norway's Sovereign Wealth Fund from the Bloomberg House in Davos. Plenty more coming up. Stay with us. This is Bloomberg.